How do you think, from your perspective, Rain City is able to share mutual success with your clients? Like, how do you guys practice that?
It's one of our highest values. Mutual success is essentially their success is our success. It's relationships. I think what holds a lot of people back from building their future in real estate is fear. People that are winning are the people that like to take the risks. They're the ones that they don't have as much fear. Don't be scared of it, right? Don't be scared.
All right, and today's guest here is Ryan Morell. He's the sales director over at Rain City Capital. We're really excited to talk to you. You guys bring a whole different approach to investing and opportunities for clients. But before we jump into kind of a little bit more about how you guys work with investors, I want to learn more about, how did you get into the real estate world? There are different ways people land in the real estate world. Some of it's, because they grew up in a family that does real estate. Other times it's because, they saw some sort of infomercial that drug them into the field, and sometimes they go the broker route. But how did you get into this business? You've obviously had a really successful career.
Yeah. It's a funny story. I actually kind of fell into it back in 2011, beginning of 11, somewhere around that time frame. I was working at a bank and I hated it. I was a banker.
Were you a teller or what were you?
I was a banker, and the whole banking world thing is tough. It's not genuine relationships, right? Which that is something that's a huge part of my life. And I always felt that it was really hard to build those relationships at a bank. And I was looking for something else and just had an opportunity. So I was hired as kind of a liaison between two different groups that have investor clients that they bid for at the foreclosure auction. And so got an opportunity to lend money and kind of be the go-between between these two groups. As kind of a Switzerland, if you will. And so quickly picked it up and just loved it. I love the foreclosure auction. That's where I started. I still do that today. It's high pace, think on your feet. I'm really good at that. Also along the way, building those relationships. I'm very trusted as well. So it was just the right role for me. And from there, I just kind of grew it and kept moving and shaking and started doing some of my own things. And to this day, I'm still lending hard money.
All right, cool. Well, that kind of leads us into, obviously you're over at Rain City, and, you guys work with investors, right? This is not like an everyday regular real estate loan type place. You're working with people who are trying to do different types of deals. So maybe you can tell us about your investor pool in terms of who comes to Rain City. What are they looking for?
Yeah. So everything we do is non-owner occupied. We fund distressed homes. We're
like pre-foreclosure, fix flip, that kind of stuff.
Anything that is investment related, right? It's people that fix and flip homes. They buy rental properties. Nothing that they're planning on living in, just something that's 100% investment.
Got it.
So it's short-term financing, or known as bridge financing to, get you from point A to point Z, whether that's flipping, buying, renovating, selling, or buying, renovating, and then refinancing into like a rental loan, something long-term.
Yeah. Okay. And, one of the things that Rain City talks about is mutual success. That's really kind of a big thing that you guys put out. And, candidly, a lot of times people are scared of hard money lenders, right? Because, they kind of, not only do they, control the process, but they've got terms that are very much in their favor. They're charging usually higher interest rates. So how do you think, from your perspective, Rain City is able to share mutual success with your clients? How do you guys practice that?
Sure. That's a great question. It's one of our highest values. Mutual success is essentially their success is our success. It's relationships. I'm a little biased, but I feel like we are the best at that. I've got clients that I've been working with for almost 15 years.
Wow.
That continue to buy and flip and grow, and watching their success, right? From the get. And then our success, it's mutual, right? It's something that we're growing together. And so my whole goal with when I work with people is to have that mutual success, because if they're failing, we're going to fail. It's a mutually beneficial thing to consider when you're working with clients.
So are there things that you guys do to help with that? Meaning, are you more flexible with underwriting? If you've got someone's deal that ends up a little bit upside down, you guys are, obviously, you have a business to run, but maybe you could unpack maybe some specific ways that you've done to really help with your borrowers.
For sure. That's another great question, because that's exactly what we do. We're we make our own decisions, right? We're not guided by Fannie, Freddie, any of we basically kind of dictate what happens. That's the beautiful thing about private money, right?
Yeah.
As long as borrowers are communicating with us, we're going to communicate with them. If they need more time, we're going to give them more time. I'm not afraid to tell them straight up, I don't think this is a deal. Or tell them this is a great deal and help hold their hand through the process. But yeah, we definitely work with our clients because we do value that long-term relationship.
Yeah, and it sounds like you've got some long-term repeat clients, which is great.
Yeah.
And so who is your ideal client? I mean, if somebody's out there and they invest in real estate or want to invest in real estate, who would be a good person to go and start a relationship with Rain City Capital?
Yeah, really anyone. A lot, like over the years, I've seen, these shows that come out, and flip shows and all the things. And so people want to do it because it's exciting. It's fun.
Yeah.
I work with the short time, like brand new, never done real estate in their lives to the ones that have been doing real estate their entire lives and have all the experience to go with it. I funded recently a family, mom, dad, brother, sister, team. They wanted to flip a house together, so they pooled their money in and they flipped their first house, and it's exciting because it's their family venture,
Cool.
and so anybody that's looking, really good clients are contractors, to be honest, because they're the ones that kind of they know what the pricing is. They run their own they run their own team, their own renovations. It just makes sense to implement that into their business, right? They're already doing the work, might as well do it for yourself. Realtors too. Realtors are a great way to go because they have access and those tools to know what's a good deal, what's not a good deal. That eliminates part of the equation because in this business, as you know, Nick, there's too many people involved, way too many people involved, right? So you have to really trust the people that you're working with. And for me, I always want to be that person in your back pocket that you never have to worry about. And that's what that whole relationship it means. So if you're a realtor, a contractor, or even a hard money lender, if you're in that sect, that's just one less thing you got to worry about because you have a little bit more control. So those are typically, but anybody can do it, right? It just takes hiring the right team and making sure that you're lining yourself up with the right people. And that also comes with time.
Yeah. Yeah. Who you partner with is extremely important. I mean, it can make or break deals for sure. And so you're talking about, hey, anybody could be one of our clients, right? It could be somebody who's a starter investor. They could be somebody who's a seasoned investor. When I think about that, I'm like, okay, well, how are you guys underwriting those people, right? Because, traditional banks, a lot of places, everyone's kind of got their recipe for how they do this and their risk tolerance. Some of it's underwriting the person, the borrower more. Sometimes it's the deal. How are you able to apply your underwriting in a way that you can work with such a wide group of people?
Yeah, we have a simple set of guidelines, right? A lot of it has to do with experience. The more experience you have, the better the terms can get. The more rope you get, essentially, it gets easier. When you start off, we want to be a little bit more cautious. We want you to kind of prove what you can do. We want to help guide you and get you to a point where terms get better, where you can put less money down, or just do more outside the box type transactions like foreclosures or whatever it may be, or ground up construction. So as time goes on, you grow, they build, and you go to the next thing. And so just a little bit tighter, but I mean, that's about it.
Okay. And, one of the things that, the reason people go to hard money is speed, right? That's one of the primary reasons, and risk tolerance. What is the turnaround time at Rain City Capital typically on, if somebody wants to flip a property? I know that, I've got experience doing that. And you're really in a race to give that person, especially if you're dealing with a pre-foreclosure, something that someone's heading down the wrong path. And that can be a competitive position, and your ability to get them money quickly is really what sets you apart. What is your guys' if you do that type of deal, what's your timeline like?
That's a good question. I mean, it really kind of depends on the client, right? We can get it done in a matter of days. It's a cash transaction essentially with a private lender involved. The more experience you have, the less things that we're going to need on our end. So literally days. But or the newbie coming in, probably about a week.
Yeah.
I always tell people, don't give me a week because there'll be a lot less stress for all of us. Give me 10 days to something.
Have some breathing room.
But if we need to, sometimes you have to do whatever it takes to get that deal. And sometimes it's shortening the close date. And I connect with realtors all the time, sellers agents that are saying, "Are you sure you can get this done?" And yes, absolutely. I know who the client is.
Mhm.
I know the deal. I've looked at it. We're good to go, and we get it done. And that's the biggest thing for me is like always saying what I can do and doing it. And I think that's what makes us awesome because timelines are everything. We need to be upfront with our clients and tell them exactly what to expect. And if I don't think it's going to be something that's going to be done that quick, we'll just let them know. And here's the reasons why.
Yeah. Yeah. So one of the things that you guys do that's pretty unique, and this is not something I've done firsthand, and so it was pretty cool to hear about, is how you guys handle the foreclosure auctions and the opportunities you have there. Because, there's a lot of hard money out there that can bring in and say, hey, if you want to flip this house, you want to do this or that, ground up construction, those kind of things. I feel like there's a lot of people that exist out there that are in that space.
Yeah.
But what you guys are doing with the foreclosure business is really different, and it really changes the accessibility of that for people. So could you kind of tell us about what you like, that whole kind of model you guys run?
Absolutely. Yeah, it is unique. It's different, and it's awesome because I really am the only person, and especially in this area, that does it. Because it's a lot of risk, right? As a lender, you have to have security and escrow, title insurance, all those things. They promote security for a lender. When you go to the auction, we literally go to the bank, take cashier's checks down there, and we go and bid on properties on behalf of our clients. And if they win, we put them on title, and then we know how to securitize ourselves with the deal so we don't get into trouble. And it also comes with a lot of experience, right? Like I've got a whole separate business where we have a group that we do as much of the due diligence as we possibly can. And we have a whole team that helps support that. And we put all of our information out in one space, and we allow our clients to be able to kind of tell us how high they want to go. And we have them all pre-qualified, and we go and try to buy them a property.
Yeah. And so I think the thing that's unique about it is not only you guys at the auctions bidding for them, but you're lending them the money, right?
Correct.
And that's the thing I think that's been the barrier for most people of going to foreclosure auctions is you've got to have those cashier checks, right?
Yeah. Yeah.
And so that's really kind of what I thought was pretty spectacular. And you guys are doing, how are you guys handling your due diligence on those properties, right? Before you show up, or that's another kind of limitation for people, which is, hey, there's a lot of risk here.
Yeah, no, the team, we have a great team, and they've been with me for years, and it's all the way down to, driving the properties and taking pictures, trying to find reasons why we shouldn't buy this thing. Is it across the street from a gas station? Is it, is it falling down a hill? Right. Just because one time we've done this many times actually over the years where we go and drive a property, it postpones 3 months later, we have to drive it again, come back, it's burnt down. Right.
Okay.
So like, you never know what's going to happen with these.
Yeah.
I think the most important is title, right?
Title
is more important, the most important part and the riskiest part about it, because, we get a quick title report, but nothing's guaranteed on that, right? It's not a preliminary title report. It's nothing that the title company is going to insure. So we cross-reference with a couple of different title companies and make sure that we have all of our information. My business partner on the group side is kind of a title guru. I have a lot of trust and faith in him, and over the years, we've acquired hundreds and hundreds of properties at the foreclosure auction over the years, and so he's been really a lot of the mistakes we've learned along the way, we've personally acquired them and made those mistakes, and we never forget about those mistakes.
So they get seared into your mind.
So we know exactly what to look for, but sometimes not everything is included in title, and that's part of the risk. When we talk to our clients and we get them signed up, it's the first thing I always try to do is talk them out of it, because it is a risky business and they're liable for that. What position the liens are, right? What liens stay and what liens go away. Federal and state tax liens, just everything that they need to know, we put on our sheet so they have that information, but nothing is guaranteed.
Yeah. So that's interesting. You said something that I just want to clarify to make sure this is the case. When you guys are looking at a property, you're running those title reports, typically like trios, right?
Right.
But you're saying that you're running a trio on a property with multiple title companies.
Yep.
So you guys are having different title companies look at an individual property, so you can cross-reference that.
Well, we have relationships with a couple different title companies that we've worked with over the years. And so they give us access to some of their information. So we're able to do it ourselves. We're able to pull them up, figure it out, and kind of make sure that we're getting everything correct.
So that's an interesting thing because, that's not something that I've heard of before. It's not something I've done before, but it is a really interesting risk management tool
Yes.
because you guys are doing enough volume. You've probably seen discrepancies between one company's file and another company's file.
Absolutely.
That's a professional move.
Well, I
That's a
mean,
pro move.
sometimes if something wasn't properly reconveyed or maybe a lien was left off. I mean, I personally have acquired a property one time that was the only loan on title that we could see.
Yeah.
And I was surprised that I got it so cheap. Come to find out, it was a second that I acquired.
Gosh.
And the way that the title works when you buy these is that everything behind it goes away.
Sure.
Right. So that's why a lot of people foreclose, even though the debt on the first position lien is so low, they probably have more in the back, right? That makes it underwater. But if you buy a second, you have to pay off that first. And you have to pay off that first before that lien goes to foreclosure or you lose your investment, right?
Yeah.
Now, we buy seconds all the time. Sometimes it's worth it. Sometimes a second will foreclose and then the first isn't even in default, right?
Yeah.
Or if it is in default, we know the timeline we have to get that paid off. But the other challenge is actually paying it off because the banks don't like to give information on payoffs because you're not that person.
Sure. Yeah.
Even though we're trying to get you paid, but
yeah,
it's the right hand, left hand thing, especially with these bigger banks, right?
especially when they're in a loss department.
Yeah.
Right?
Yeah. They don't know. Yeah. But it was funny because I had this property wholesaled. I already was selling it and making some decent money on it. And my title gal was like, Ryan, this is the second you bought and the first is X amount. I'm like, oh crap. So I was lucky in the fact that I knew the trustee and I called him. He's like, actually, they meant to file bankruptcy and didn't do it in time. So I was able to get out of it.
Oh no.
But I was facing probably like a $20,000 to $25,000 loss on that one.
Yeah.
So, and it happens.
It does.
It happens.
It does.
I've have clients that have acquired seconds and we're just like, oh, sorry. Well, let's help you try to get out of this. Or now they're working to break even, right?
Yeah.
So it can be tough.
Yeah. Not all of our winners. If they were, everyone would do it, right?
Exactly. Yeah.
So it sounds like, you guys do a lot of single family properties. Sounds like you've done some, it really just sounds like it's residential. Do you guys do any multifamily lending for acquisition or ground up development or anything like that?
Yeah, we will. Multifamily is just a different animal, as you know.
Yeah.
And so it does take experience on that end. The terms are a little different. You got to have a lot more cash involved, right? A lot more skin in the game for something like that.
Sure. Yeah.
And especially with ground up, because ground up is always changing and it's always evolving. But yeah, multifamily, we actually fund quite a bit on the short-term side of things.
Got it.
We don't have anything on the long-term just yet. We're working on that, but short-term wise to get it from, bridge from the acquisition to payoff. Yes.
And what kind of amounts do you deal with? Because multifamily is a huge category, right? It could technically mean 5 units or it could mean 500 units. Right. So, what kind of arena are you guys playing in?
More of the smaller. Yeah, more of the smaller ones. But the beautiful thing about this business too is you connect with others. And so I have an array of relationships that I work with that is, if it's something that's a little bit out of our realm or outside of our box, one thing I love to do is connect my clients with people that I trust, that I know it can get it done. And so there's nothing really we can't do because I can find a route for you.
Yeah, makes sense. And, you kind of mentioned this a little bit, and I just wanted to clarify, are these loans that you guys make and originate, do you guys hold them within your portfolio or do they get sold? Or, I mean, they're short-term loans, so I can't imagine, there's probably a lot of trading, but maybe. How are you guys handling that?
That's a difficult question right now because traditionally, yes. But we are on such a huge growth path right now. We've had record-breaking months for over the last, I think, 6 to 9 months. Every single month, we're growing our originations, growing. We've funded a securitization last year. We got another one coming up, so we have to keep feeding that machine. So we have some actually good relationships on the note buyer side. We service 100% of our own loans. So it doesn't matter. Our borrowers don't even know what's going on behind the scenes. We have great relationships with them. We know exactly what we're able to do. We're also able to work our guidelines with them as well and kind of negotiate how we want it packaged up to be competitive in the market. So we do hold, yes. But majority right now we're working with our note buyers on.
Got it. That makes sense.
Yeah.
And so obviously with that kind of, I mean, you've been growing through some interesting times, right? We've
Yeah.
seen really turbulent interest rates, they've gone high, they've stayed high.
Yeah.
The bond market's kind of doing interesting things these days. What is setting you apart? Why are people coming to Rain City? I mean, again, we earlier touched on the whole, mutual benefit, but what do you think is driving your guys' growth?
Well, I think a lot of it also is our side of the coin. The investment side of the business is just completely different than the consumer side. And even through all the turmoil, we're always doing well. We've never really had moments where we've just dipped or we're not, trying to figure out another job, right? 2020 was the hardest year for us as a business, and it was only because we decided to back off because we had no idea what was going to happen through COVID.
And we're all kind of
Right? Yeah. But as you know, that market exploded the year after, right?
Yeah.
So it's hard to say now with the economic, I guess the heartbeat right now. There's a lot of unknowns, right? There's a lot of questions that are going to happen. We have no idea where things are going to go, what they're looking like. But we've always had continuous growth through this whole time. Borrowers and clients, they're basically trying to find other ways that make sense in the investment side, because there's never a bad time, as you know, to buy a house.
Sure.
And if you're an investor, you have to just think differently about how that works. And on a flip, it's different because you only have a certain amount of cash and you have to plan accordingly to make sure that you don't lose that cash.
Yeah, you got to exit right.
Yeah, but so it's always good to have multiple exit strategies, right? You have an A, B, even a C strategy. If something doesn't work, you know how to get out of it. So you just have to be really smart about it, depending on what the market is doing. Back in like 15 through, or actually 12 through 17, I flipped so many homes, and we just would acquire it,
yeah,
and turn around and put it out there if anybody wants it for a certain amount, and get bids within the 2 weeks. And I swear that it was growing higher than 12%. The longer we held it, the more money we were making, right?
Yeah.
Those times are over, but
sure.
That was a fun one, but the market's always shifting, changing. There's always ways to make money out there, and it's just, you just have to kind of shift with it.
Yeah. And so you guys have grown a lot, and so that raises the question, which is like, where are you guys getting all your funding from? Because, obviously you've been at it for a long time. Is this something that the company kind of self-funds? You guys have investors? Like, where's your liquidity coming from?
Well, I mean, like, we had our investor pool open for the longest time early, right? And have just grown, and we've always kind of stayed at that level where we're not ready to go to the New York side of things, or you know what I mean? It's we've stayed at a certain consistent level and just grown, right? And grown our cash. We pledge loans with the bank. We have lines of credit is huge. It was only until just recently we actually opened up our investor pool again. And so, because we're on such a growth path.
Yeah.
And then these securitizations is the new thing. We're at Wall Street level now. We're amongst the top 20 in the country for what we do. And
Can you expand on that? Tell us, people might not be familiar
sure.
with securitization.
Yeah, basically it's a large pool of money that we're able to access, but we have to continuously use it because it's expensive, right? So it's like one of those things where you have to continuously use it or go.
Yeah.
So that's why we're trying to think of other ways outside the box where we can originate more so we can fill that. But what it does for us is it provides us with more opportunities to do cooler stuff, right? Like lately at the auction, it's been tough because we're having to utilize our funds in different places, and we have a lot more fundings happening. I used to have like a pile of cash in the corner that I could take from, and these days it's a little tighter. So having that securitization is going to help really with being able to provide more cash for those opportunities, as well as other opportunities that we can even hold. So yeah, it's always a moving situation. We also just acquired a company that allows us to do a lot more DSCR loans. And so that has also been taking a lot of our cash back and forth too.
Service ratio loans.
Yes, exactly.
Yeah.
And that's a long-term rental loan. It's private. You can have as many as you want, not guided by Fannie, Freddie. So those have different guidelines, and they're tighter guidelines, but you could, most of these investors haven't filed taxes in years. So it's a great way to buy a house and hold it long term and without having to file taxes. So so that also has launched our business even further. But it's and those ones are not something that we would hold. Those are DSCR loans are loans that we originate, sell, and that's how it is across the board.
Duration.
Those are the only ones we actually don't service. To be honest, there's national servicers that do that.
Got it. So, one of the things that people always want to know, and I'm sure you get this question all the time, and I realize it's not the only thing that matters, but in your kind of traditional business where you're helping people buy foreclosures or flip a house or things like that, what does the cost of that look like? Do you have points on the front?
Mhm.
What's the rate on the back side?
Sure.
Prepayment penalties, those kind of things. Do you have kind of, and I know it's going to vary probably based on the market, the borrower, profile, property. Do you have a kind of a range like, hey,
Yeah.
typically this is what we charge at origination? And
For sure. I mean, we're anywhere between 10 and 12% on the rate, interest only. On the short-term loans, we have no prepayment penalties. Sooner you pay off, the more money you put back in your pocket. Our points range anywhere between 1 to 3 points, just depending on the deal, right?
Sure.
There's all different aspects, but majority is about 2 points for origination, which is funded at closing, unless it's a foreclosure. All the auction deals we do, all the points in origination get put into the loan.
Okay.
There's ways that we have to do it in order to kind of fit the mold. Those are the most ass backwards acquisitions you'll ever do, because it's like literally a handshake deal. Your
Yeah, you
payment's
guys are
gonna.
taking title and then you have to.
Yeah,
Yeah.
yeah. Here's our account number. Go ahead and put that down payment in there. No escrow. It's really, and that's why a lot of lenders won't do it.
Sure.
Because that is more the mutual success part we were talking about.
Yeah.
Those relationships are huge, and we are very, very connected with our clients in that way, and they understand what happens. I've been doing this for almost 15 years and never had someone not commit, right?
Yeah.
So it's just one of those things where it's more delicate, but it is definitely different than those acquisitions. That's for sure.
Yeah. That's interesting. Do you guys ever do any sort of like joint venture stuff with clients? I mean, you guys are taking on a decent amount of risk. Do you ever, and I realize it'd probably have to be like a home run deal or something that really made sense for you guys, but have you guys ever done or contemplated doing joint venture deals with people?
We've done them in the past. It's not really where we're headed now.
Sure.
But in the past, yeah, we used to do that sometimes with certain individuals. But not so much anymore. Not where we're going.
Cool. Well, Ryan, it's been great talking with you so far. We're going to take a quick break from a word from our sponsor, and then we'll be back.
Sounds good, man.
Cool. All right, we're back. Ryan, one of the things that I wanted to ask you about, because again, what attracted me to talking to you about all of this is that you guys have such a different approach in the products that you offer to investors. And you mentioned that there's something you guys do is like cash as collateral. Like,
Yeah.
what is that? Tell me about that.
Yeah.
That's kind of an interesting
Yeah.
concept.
It's a really cool creative concept. One of my job really is to fit a square peg in a round hole, right? It's putting a puzzle together, figuring out I like to ask my clients, what's your goals? What is your strategy? Are you trying to just flip 100 homes? Are you trying to hold as many as you can? Are you open to whatever kind of comes down the pike? And so finding out from them what their goals are, specifically holds, right?
Yeah.
Rentals. If they're looking to buy rentals, everybody's probably familiar with the BRRRR strategy, right?
Yeah, basically,
Buy, rent,
renovate, repair
repeat.
or whatever, and then
Yeah. And so your whole
finance the whole thing.
the whole spiel. But the whole benefit of that, the point of it is to get your cash back and go and do it again,
Sure.
right?
Yeah,
Essentially, yep, exactly. Essentially kind of buying a property for only the price of closing costs and then going and doing it all over again. So we kind of have something like that, but it's not a BRRRR. And the way that works is that we will do a regular short-term loan. And again, the whole goal is to bridge you from the short-term to a rental loan. But it needs, building equity along the way, right? Doing the repairs, the renovations it needs so we can get that appraisal value up. So we fund a deal just like normal. But the unique part of it is instead of recording the note at, 80 or 85 or even 90%, we record the note at 100%. And we hold the down payment as collateral towards that note, right? So when they go to refinance out, they're going to get a payoff. The takeout lender is going to get a payoff. And as long as the LTV works, I always say generally 75% because it's harder to get 80 these days.
Yeah.
As long as we get paid off in full, we'll just give you that down payment right back. And even if you don't hit full value, and let's say you get half of it back, well, great. You just bought a property for half the cash that you used and you were planning on using it all, right?
Better cash
So
cash returns.
exactly. So I have clients that just do that with every deal they're holding, even if it doesn't work out, because they have the opportunity to get that back. Because sometimes, obviously, we don't know what appraisals are going to do. Like sometimes it's you could win, you could lose. It doesn't,
Sure, yeah.
it's all it. But if it,
Especially after '08, it's kind of
yeah,
it's a
everything's different,
yeah.
right? So if there's that opportunity to get more cash back, it's a great one. I've had clients that we've done this for, and then they decided to go yard and do more on the house and build more equity, and they were able to get not only 100% of their down payment back, but also cash out as well. So this game is all about leverage, right? And the more you can leverage out, obviously without being too levered, the more you can grow. And if you can do more with the same money, that and your debt service is working out, you're in good position. And that's how real estate investors grow their portfolio, is by utilizing other people's money.
Yeah.
And especially when they can use their own over and over again, right? I've got a client too that has probably acquired 8 or 9 rental properties over the years using the same down payment money with every property. It's pretty incredible. Yeah, it's a cool way to go for sure. Just creative.
Yeah, cool. Well, one of the questions, I'm sure our listeners have is, where are you guys operating in, right? We've got a pretty big, kind of national audience, right? So where is Rain City currently lending? Like if somebody wanted to work with you, I mean, obviously I'm sure we can throw some resources out there about the website that shows that, but what are your kind of primary areas?
We're right now we're doing short-term loans in, I think, 16 states and counting. So we're always looking for the best markets that we want to be a part of, also that work better for us, right? That as a lender, we want to make sure that certain states are a lot harder to foreclose in or to file default in. We want to make sure that we're safe as well, our investment's secure. So we're continuously looking for other areas to grow. On the debt service coverage ratio loans, DSCR, those ones we have, I think, 43 states we can operate in.
Okay.
Yeah, but our primary, I mean, our bread and butter we started is the Puget Sound near Seattle, right? And then we've grown to Oregon, and so for the longest time we were just operating in those 2 states,
Primarily in the Northwest.
Yeah, and then went to Texas and Tennessee and just kind of grown all over
the states.
Yep. I mean, a lot of my clients, I've got the bulk of mine are Oregon and Texas.
Sure.
Do a lot of loans in Texas and have spent a lot of time down there, building that arena. And now we've got a lot of, we have a ton of loan officers now in all different areas of the country that are trying to kill their areas. So, we're continuously growing into different regions, different states, and learning those, how to do it in those states too has been kind of a challenge in some aspects, but that's how we grow.
Yep, absolutely. So one of the questions I have, and again, you guys are on the private money side, but inevitably this may play a role, is like, obviously people talk about interest rates in the market going up and down. Right now people are always, they were kind of use the 10-year treasury as kind of the kind of benchmark.
Right.
How does that affect your guys' lending practices? I mean, does it change it much? Are you guys pretty, insulated from that?
I mean, it does. We do look at the 10-year and the mortgage-backed securities market. It's more of like cost of capital, right? Is how it's affected. So we're always going to be, I mean, at some aspects, and I don't know fully what our cost of capital is at the moment, but I know, as things were changing, we do a 10% loan, we're almost breaking even. But
sure, yeah.
We offer that to our clients because we want, we want the relationship to us is more important, right?
Yeah.
But it is moving. It's ever changing. DSCR is a little different, right? That's more operating on the market itself, and always is going up and down in fees and rates. So
sure,
yeah, but I'm not exactly sure what that cost of capital is, but that's basically kind of what it affects.
Got it. And I know you don't have a crystal ball here or anything like that, but what do you think is going to happen with interest rates this year? Do you think they're going to get better, or for real estate investors, or do you think they're going to hang out where they are?
If I had $1 for every time somebody asked me that, I'm like, oh my gosh. I mean, I don't know. It's hard to tell. We've been thinking that rates are going to go down over the last couple of years, and it's kind of been this little like steady up, but coming down. And so it's ever changing. I mean, the rates just went up a little bit. So it's hard to say. I can't even really comment on that because it's once you think you do, and you don't. And, so we did thought that 2021 was going to be a lot different than it was, but who knows, especially with the heartbeat of the economy right now, like who knows? Who knows?
A lot of balls in the air.
There is a lot of balls in the air right now.
Well, if I'm an investor, I mean, one of the things you mentioned earlier, it's always a good time to buy a house, right? And that really comes down to obviously the deal economics.
Sure.
But people are talking to you, I'm sure, a lot, right? You're schmoozing and wheeling and dealing, and so what opportunities are you seeing in 2025 currently for your clients? What are you looking at this year?
Well, that's a tough one too, because again, we don't know what's going to happen. There's a lot of moving parts right now. But one thing I do know is that history repeats itself, and history always shows growth in the market. Average growth is, what, 3 to 4% a year, year by year. Sometimes it's 7, sometimes it's under. But as long as you have the means to acquire a property and hold it, and even if it's a negative debt service, but being able to afford and maintain and hold that property, you're always going to be growing equity. You're always going to be paying down your loan. Rents are always going to continue to increase. So that's when I say it's never a bad time to buy. It's because it really isn't. I mean, unless you have to be able to afford it. Obviously, you got to be able to support the deal and your payments, and make sure to maintain the house itself, right?
Yeah.
But if you can do that, you're always going to win. So as far as like what I'm projecting for this year, I know that a lot of people right now are trying to hold properties. It's just really hard to debt service in our area. Right?
Sure. Yeah.
Because it's the market's just
Acquisition size.
Yeah.
Yeah.
But a lot of people are looking Midwest or down south, and that's kind of another reason why we've opened up a lot of these states, and building teams in different states, and still operating it from home.
Yeah.
So, and what's cool too is over time we're building a lot more resources to be able to like help people, connect them with different resources that we can. And that's one thing I always love to do is if I can provide a resource, especially if you're not in that area, I'm going to do it.
Yeah.
So, yeah.
What kind of loan volume have you guys been doing? Like last year, do you have an idea?
Yeah.
What you're kind of, just to give people a sense of scale and.
Yeah. Last year we hit a huge milestone that we never thought we'd be able to do. I think we funded it was 523 or 27 million in originations last year. And
that's crazy, especially given the market you guys are going at.
Yeah.
Tackling, you guys are doing large residential. Like that is
huge.
That's pretty impressive.
Yeah. And truly we did. I mean, it was our goal.
Mm-hmm.
$500 million was our goal. And we didn't think we were going to get there. I mean, to be honest, and
a lot of work.
It was a lot of work for sure, but we've got a great team, and again, I'm biased, right? But our teams are rock stars. Like everybody in their area, from sales down to ops to assistants to even accounting. And I mean, everybody is a rock star. They have experience. They fit our culture, because culture is actually our number one value. We are a family. We just got together last week or the week before. We fly everybody in one location just to hang out, because culture is so important to us. And the better the culture, the better we work together. And our teamwork is second to none. And so when new people come aboard, they're going through 4 or 5, maybe 6 interviews before they actually get hired, because we want to make sure that they're the right fit with us.
Yeah.
So I attribute a lot of that to our company wide.
Yeah.
I know personally I've had deals where I'm like, I don't know how this is going to happen. We've got this amount of days and we still have to do X, Y, Z. And everybody pulls together and makes it happen. Everybody works hard. So that's a huge aspect of it.
I think as Peter Drucker said, culture eats strategy for breakfast.
Yeah.
And we're big believers in culture. I mean, nothing will make your life better or worse than the culture.
For sure.
Well, Ryan, what haven't I asked you about that you think it would be important maybe for investors to know, the audience to know, that you'd like to share?
Yeah, I think that don't be scared of it.
Yeah.
Right? Don't be scared. I think what holds a lot of people back from building their future in real estate is fear. And to be fair, they should be in some realm. We were never taught what a mortgage was. We were never taught how to do taxes growing up, right? It's something we've had to figure out along the way. And the people that are winning are the people that like to take the risks. They're the ones that they don't have as much fear. But the people that have a lot of fear are the ones that I think sometimes should be doing this, because they're able to step back and be a little bit more conservative and understand the process. It takes just education. And the coolest thing right now about today is that you can get so much free information out there. So much free information.
Yeah, that's pretty.
I direct a lot of people to Bigger Pockets, right? We're very friendly with Bigger Pockets.
Yep.
We all originated in the same area, know a lot of people over there, and they give away so much free information that it's gold, really. So anybody can do this. And hard money, again, is like, people have this thought and feeling that, I've got this board over my shoulder, I'm going to come break your legs. It's like, that's all. No, that's all, we're a simple, friendly service that we take on the bulk of the risk, and we help investors grow. And it's something that we try to do with ease. We make it as simple and as seamless as possible for them. And once people understand what hard money can actually do and the benefit of it, they're sold. It's like, oh my gosh. I mean, think about it, right? If we're coming in and funding 85% of the total cost, and you're coming in with 15%, and you end up making 20%, like your ROI is over 100%. It's like it doesn't matter what fees are at that point. Your cash on cash return, it just makes sense with the amount of risk that there is involved to do this. A lot of the old school mentality is like cash, right? You use all your cash, but you use all your cash, you could lose all that cash. Like you
definitely can.
It's not something you want, so you saving your own cash is so important, especially today. I'd say your cash is the most important thing that you can hold on to right now. And if you can leverage yourself out to where you don't have to spend it, do it. There's a term, OPM, right? Other people's money.
Yep.
Well, I'm an OPM person. You can use me, use us. And it's really not scary. It's easy. And one thing I enjoy doing is I love working with new clients, people that have an idea. Some of the greatest conversations come of it, and I can tell out the gate whether they're going to be a success or not, right? And sometimes it's having those honest conversations, but fear gets in the way. And I think that there's really something that you can learn to not be as afraid, but still be conservative and win.
I love that. It's great. So we're going to pivot here. I've got 3 remaining questions. And these questions are more to just get to know Ryan, right? Just so we get to know you as a person. And the first question I have is, if you had to have dinner with somebody, anyone, dead or alive, who would it be and why?
I had to have dinner. That's a tough question, Nick. I mean, I should just go with what comes to my head. And, so I love golf.
Yeah.
Right. I love golf. It is such a passion for me. It's that one thing that you can do for 4 to 5 hours outside with friends, having a good time. And it's my therapy. It gets me away from thinking as much as, I do think.
Sure.
Right.
Yeah.
So, I mean, honestly, it's kind of funny. I think I'd hang out with John Daly. I think he would be so much fun to hear him talk, and because he's so different than anybody else on the golf course, right? And I'm just blown away because everybody else is so, I was talking with somebody one of our friends actually, and he was saying that I don't understand the dress code at a country club, right? Well, neither does John Daly. He doesn't care. It's it's so different, which is so cool. I love that. So probably John Daly.
Great. And if you had to choose whiskey or wine?
Well, I've gotten into wine a lot lately, but I'd go whiskey.
Okay.
Yeah.
When you say whiskey, is it like Scotch, bourbon? You got any top 2?
I mean, I'm not as acquainted with whiskey as you are. However, I'm a Jameson guy.
Nice.
You can drink
Irish whiskey. There you go.
You can drink it neat. You can drink it on the rocks. You can mix it. It's one of those whiskeys that just kind of goes with everything, and it's not, it's middle of the road.
Yeah.
So it's my favorite.
I like it. And then the other question I have is that you've been in this business for a long time. What, maybe 17 years? Something like
almost 15.
Almost 15. Yeah. Okay. So a while. You've seen a lot. You've been through a lot of market cycles. A lot of times people don't know where they want to end up in their career, right? And it sounds like you kind of fell into this, right?
Yeah.
But a lot of times people go through changes in their career, and that's fine, right? They figure out what they don't want to do, and they pivot. But you've obviously stayed in this business for a really long time. How did you know that you picked the right career?
That's a really good question. I think for me, it was just, I love people. I love working with people. I love servicing people. I love the idea of putting a puzzle together and making things work. The creative side of the business, being able to do my own stuff as well and learn from my clients as much as they learn from me, if not more. Probably learn more from my clients than my own experience, to be honest, because everybody's doing so many different things, and it's like, wow, that's really cool. That's a good idea, you know.
Yeah.
I love watching clients that I do their very first deal with, and then years down the road, it's like their 150th, and to see the growth and you know, mutual success, right? To me, it just brings like this inner love, right? And I love that I'm able to do more. I love that I'm able to play golf.
Yeah.
Not, you know, have a 9 to 5.
Yeah, freedom. Some
freedom,
flexibility.
So it's fun. I enjoy that.
Awesome. Well, that's awesome. Ryan, really appreciate you being here today, guys. I
Yeah.
represent Rain City Capital, and yeah, if people want to connect with you, what's the best way to reach out? Should I drop some stuff in the show notes? Do you want to throw out an email or anything? Or
Sure.
where
Yeah.
you at?
Yeah, you can reach me. I am on social media. I don't have a ton of business social media stuff, just me personally, but
Sure.
my email is ryan@raincitycapital.com. My phone number is 425-319-7757. Best way to do it is text me, really. I'm on the phone all the time. It's kind of my livelihood, but yeah, the phone is the best way. So yeah, absolutely.
Cool. Well, again, thanks for joining us today, Ryan. Really appreciate being on Retire on Rentals. And that's the show, folks.
Thanks, Nick.
Thanks.